What's up guys, Richard K from Price Action Income, and welcome back to another one of my YouTube videos. This video I'm not going to be talking about analysis or strategy or anything like that. I'm just going to be showing you this really cool feature that's here in TradingView called the compare button. As you've probably seen in the title of this video, what I call alternative instruments. Quite often with my members, if I would, let's say, do analysis on gold, for example, some traders or members just does not have the buying power, for example, or the margin requirements required to trade the future side of things, for example. So there's so many different markets that track the price action of a particular market that I just call them alternative instruments. And they can give you exposure to cheaper prices, or in the case of, let's say, gold, for example, if this was on the future side, if you were trading that, you need quite a bit of margin to put forth before you can open one contract of gold. But if you wanted exposure, for example, to gold, but you can't trade the futures, then you can trade something on the ETF side like GLD, for example. And there are so many different instruments that give you exposure to, for example, the future markets, that there's just too many to mention in this video. But I've picked up quite a few. I'm going to show you guys that I quite find works really well, because it tracks almost to the T the exact price movement of either the spot market of gold or crude oil. And we're looking at the ES and the NQ as well. But anyway, we got the gold open here. Like I said, no analysis today. We're just going to look at the spot price of crude. And if you go to TradingView on the top here, I'm sure the other platforms can do this. I'm not sure if MetaTrader can. Perhaps you can spread a chart over the main chart. But for this video, I just want to show you this cool feature. So now that we got gold open, I know that GLD is an ETF that tracks the price of gold almost perfectly, but it's priced in a different dollar value. So if you were to click on the compare button over there, punch in GLD, for example, it would lie under the stocks. It's an ETF, and then just go here to new price scale. Let's just quickly get rid of it, and you'll see this orange line is the price of GLD, and on the left hand side that's a price scale for GLD, and you'll see from here that it actually tracks the price of gold perfectly. Now obviously the advantage here is that you don't have to deal with buying, let's say you're forced to just buy one contract or multiple contracts when you trade the future side. You can then buy a certain amount of shares, in this case, of GLD at a much cheaper price, and gain exposure to the price action that is prevalent in gold. Then we have crude oil, one of my favorite markets that I trade. If we do the similar thing over here, we can go to USO, which is the ETF that tracks crude oil. Again, I just want to use a new price scale, and it basically will be overlaid over it. And as you can see, all these little zigzags of what you have here, highs and lows, almost tracked exactly by the price of crude. In this case, crude oil on the future side of thing, you also need to minimum trade one contract with a $1 tick value per movement, which can be quite expensive, and not even to mention the margin requirements, especially when things do get volatile, can increase and be determined by a broker. So if you want exposure to crude oil, for example, the alternative instrument on the ETF side is USO. There are other ones, anything simple as doing a Google search. Just type in crude oil ETF, gold ETF, ES ETF, NASDAQ ETF, whatever the case might be. And I have not yet really found a nice website where you can actually look at all the alternative instruments that track each other in all the different sort of, let's say, on the indices sides, energy complex, agriculture, or whatever it might be. But just for today's sake, I just want to show you how it's possible to spread an ETF over the price action. And if you cannot trade one market with regards to either your account size, margin requirements, whatever it might be, it is possible to trade a different market that tracks the price action, and in many cases at a reduced cost as well. Just make sure this is a really cool technique on TradingView. If you do use TradingView, if you don't have TradingView, you can always sign up for a free account. I'm sure you can use that in a free account as well. So it doesn't cost anything. To spread it before you do trade the ETF, to make sure that it actually tracks the price perfectly, or at least as close as possible if you want to trade the alternative instrument. So we got USO. I mean, the crude oil's at the moment trading at 60.69. Here it's only at 41.17. Keep in mind, obviously, that this will only trade during the US stock open trading hours, and it doesn't trade 24/5 like it does on the future side of things. Very cool. The S&P 500. The ETF on there that you're probably all familiar with is SPY. There we have SPY, new price scale. Again, it only trades during the market, US market open, stock market open. Again, it tracks the price of the ES very closely. But instead of $3,952 where the price of futures is, it's trading at $394 and some change on the SPY. And then recently, something really cool, if you want to stick to the futures side, but the ES, for example, the S&P E-mini was too expensive for you to trade, or your account's too small, they did introduce the micro accounts, or micro futures markets, and that's basically micro ES. And we'll look at the NASDAQ shortly. Go to futures over there, let's do the same thing, and overlay that. And I just want to use a continuous contract just to show you. It's going to color it in blue, and you'll see that it actually gives you exactly the same price movement than the, let's say, the big brother does. And just at a reduced cost, reduced margin requirements, and reduced tick size for every tick that this market moves. Similar to the NQ, the NASDAQ, and the future side. You could look there, for example, at, I think it's QQQ on the stock side of things, new price scale. And this will be the ETF. It's trading at $314, where the NASDAQ's trading at $12,950. Again, only open during market hours, but at a reduced cost, and tracks the price of NASDAQ pretty well. Then lastly, they also have an MNQ, which is again the micro NASDAQ contract. And if we click on there, just continuous price. Again, if you want to trade the futures, also I believe it's 1/10 of the size on the pip size of the move, or as you would call the tick size on the future side. Gives you exposure to this market at a reduced cost, reduced margin requirements. And just a great way to participate in the markets. I get so many questions sometimes from my members saying, like, I can't trade the ES or, crude oil, for example. And I don't blame some people. Crude oil can, for example, be a very volatile market. Margin requirements can be extremely high. I mean, you can have ranges of $2,000, $3,000, $4,000 per day per contract. If you're on the wrong side of that market, don't know what you're doing, you can get really hurt and lose basically all your money or blow your account. And that's why I always say that if you don't have the proper account size or the margin requirements to meet opening at least one contract on crude oil, for example, then you can always go and look at the ETF side of things and gain exposure to the price movement of crude oil. Right, guys, so that's what I mean by alternative instruments, and just want to show you this nice feature here on TradingView. I'm sure you can do it on other platforms as well, but if you can't, then it's always easy. Just open a free account on TradingView, and then there you go. You should be able to chart this without it costing you a cent. Just make sure that you're trading on the right side of the markets. Before I actually go, what I mean by trading on the right side, if you, for example, go to, let's say, 6J, Japanese yen, the future side, let me just get rid of that, remove all that. This is a Japanese yen futures. So it's on the future side of things, the currency futures. And if you probably know that you could trade the US dollar Japanese yen on a forex side, and there you can change your lot size, and you obviously control your position size, if I can put it that way. But if you can't trade the futures, you can go to the forex side. But in this case, you have to take note that although, let's say you were watching the price action of, or inversely, the price action of the one that has got an indirect correlation, or not a direct one. So it's a reverse correlation of what the other market is doing. So if you were gonna, let's say, buy the US dollar Japanese yen, you'll have to sell it on the futures side if you want to trade the futures, and the other way around. Anyway, guys, I hope you enjoyed this video, and that's what I mean by trading alternative instruments. There are so many out there. Like I mentioned, too many to mention during this video, but there shouldn't be any reason that if you really wanted to trade, that you can't gain exposure to some markets that you've always wanted to trade, for example. But in any case, if you haven't done so before, please subscribe to my channel. Hit the notification bell so you're alerted next time when I release more videos. And that's it for me today, guys. Take care and goodbye.